All right, guys, we got some Panw numbers here. Initial first response in the stock is slightly lower. The numbers on an EPS front, 80 cents. On a revenue front, 2.3 billion. That's basically right in line. They provide fourth quarter guidance in which the low end, 87 cents to 89 cents for EPS, is in line with the estimate that I saw for a midpoint. And on a revenue front, it's basically right in line. On fourth quarter revenue, they see 2.49 billion to 2.51. Street estimate right at 2.5. Kevin, I'll give you the first crack here. Anything stand out to you? And the kind of subtle reaction, does that make sense?
It makes sense a little bit. Look, I think if you're looking at the overall numbers, they pretty much came in a little bit light when it came to the subscription and support revenue number, fractionally. Right? We're talking about a couple of $1 million there. Remaining performance obligations, I think, is one of the bigger metrics that we should be focusing on. The Street was expecting around 13.5 billion for the quarter. They came in at around 13.5 billion, so came in line with the Street's expectations. Maybe a little bit light, once again, off about maybe $40 million or so. I haven't looked at the commentary, but it seems like everything came in line with the expectations. Maybe a little bit light when it came to ARPU, and also when it came to the subscription revenue, which is a huge driver for their business. But we'll listen to the commentary. I think if they talk about the slowing of sales cycles like they had about a year ago or so, year and a half ago or so, that's where the stock could actually get hit pretty hard. But right now, it seems like it's trying to maintain. Their conference calls are really good. I'm not sure if we're actually getting it today or tomorrow morning. It seems like they switch it. But overall, it looks like the headline numbers are decent, maybe coming up a little bit short when you're looking at some of those internal metrics.
Yeah, the annual recurring revenue for the third quarter was 5.1 billion for that next-gen security, Kevin, which was basically in line, to your point. And then those remaining performance obligations, 13.5 billion, was a little bit light. JD, anything standing out to you, or are we waiting for this conference call?
Yeah, I think the conference call is key. Kevin brings up a good point to listen in for some of the specifics or the nuances on the commentary. From Nikesh Arora, the CEO, I'm really looking for a bit more of a deep dive into how he sees the current landscape or ecosystem of agentic AI and how it's interfering and kind of interacting, so to speak, with the general cybersecurity space. Every major cybersecurity firm, and we can't forget, Panw is the largest of these names by market cap here. The big fight is on to recognize that, the bad guys out there, the threat actors in the cybersecurity land space, they are using artificial intelligence. And so I think the public posture from Aurora and from the company and lots of companies like Palo Alto are going to be, how do we make sure that the so-called good guys are leveraging agentic, not just regular AI, but agentic AI as well, artificial intelligence and tech that not only thinks for itself, but then takes it a step further to act for itself. That has been a real priority in a lot of the interviews that we've heard from the Palo Alto CEO over the course of the last 6 months. I'll be interested to see what he has to say more on that. In the last 5 years, the stock has seen a positive one-day return 70% of the time the day after reporting earnings. So we'll certainly see what investors have in store after hours and into tomorrow's session as well.
Yeah, I love that stat on how often it's higher, Kevin, because it also, at least over the last 4 quarters, has been quiet in its reaction. The biggest move being back in July of 2024, where it moved higher by about 7%. But we all still remember that January 2024 drop where the trap door opened and this stock fell almost 30%. It doesn't look like that's going to happen. So at least crisis averted, Kevin. What would you want to hear from this company as a kind of final thought to maybe turn this into a green reaction from a red one?
Yeah, obviously demand is still coming in strong. Remaining performance obligations, their projections moving forward, if they are seeing some positive signs there, you do not want to hear any type of slowing in the sales cycle. I think that's a big risk when it comes to enterprise spend, especially given this environment that we're in right now. And if they do kind of mention that they are seeing some cracks with maybe some of their smaller or even mid sized customers, that's probably what's going to continue to see this move to the downside. So you want everything to kind of be above board, give an optimistic view when it comes to the product offerings and the service offerings that they have. And if they're able to do so, then even having this pullback that we're seeing right now wouldn't be all that bad at the end of the day. So you just don't want to hear anything negative. It makes it very easy for them.
Yeah, no, well said. I mean, this is a really pretty much an unchanged reaction when you go off volatility that was expected. Looking for about a 7% move right now. We've maybe got 2.5%, 3%. So pretty subtle. Conference call may tilt that one way or another, but appreciate both of you guys, Kevin Green, JD Durkin.